One of the concerns that I've received from a lot of my smaller institutions, smaller banks, is with the extension of insuring deposits across the board, they felt vulnerable in that larger institutions may decide to pull deposits that they have in the smaller institutions because then they would be covered. Under Secretary Liang, I wanted to get a little clarity on what seems like is conflicting accounts from Secretary Yellen regarding deposit insurance. Now, on Tuesday, March 21st, the Secretary suggested deposits would be insured. She said, quote, if smaller institutions suffer deposit runs that pose the risk of contagion, then that was the end quote, then during her testimony to the Senate Finance Committee the very next day, the Secretary said she was not considering, quote, blanket insurance or guarantees of deposits. But then a day later, she said that Treasury, quote, would be prepared to take additional actions to protect depositors if warranted. Could you clarify the Department of Treasury's position regarding deposit insurance?
Yes, thank you, Congressman. As Secretary Yellen has said, we have used tools to prevent contagion in the banking system and have reflected a commitment to ensure that all deposits are safe. And that means we would use the tools again, if needed, to ensure that Americans' deposits are safe.
So your answer is yes, you would include smaller institutions, smaller banks, community banks, or, I mean, I'm a little confused.
If conditions warranted, deposits that smaller institutions could pose a risk of contagion to the broader system, we would absolutely use the tools.
So I guess the question would be then, what is that condition? If it starts with one community bank, then that would be a trigger, or do you have more definition of what would be the condition?
I think it's very difficult to just make decisions on the hypothetical, but in this environment that we made the systemic risk determinations based on unanimous approvals from the FDIC and the Fed, we determined that the risk of contagion in the banking system was very high.
So with that and the action of extending it to larger institutions, regional banks, and then smaller institutions, do you have concerns that regulators may be creating moral hazard across the entire banking system?
I think we are concerned with addressing the current situation that we are facing. We think the system has stabilized. We have information and evidence that deposits have stabilized. We will need to address reforms going forward to address concerns about moral hazard.
Okay, and I agree with you. I think that we're stable at this point, but as we've seen already, things can turn around in a 24-hour period, right? And I am one of those that, from raising 3 young children and now with 5 grandchildren, consequences matter in future behavior, and we can't ignore that going forward. Last question. Why did the Secretary's position appear to change regarding the extending insurance to to smaller institutions? Why did she change her position between the 21st and 23rd? Were there internal discussions going on between the Secretary and the President or other prudential regulators that caused the shift?
I'm not aware of any conversations.
Okay. Well, I appreciate that, Mr. Chair. No further questions at this time, and I yield back.